You said something that actually piqued my interest. Most people, and tell me if I'm wrong, but I feel like you didn't know what SBA was. I feel like most people don't know what SBA is either. So, to our audience, can you tell everyone in layman's terms, what is an SBA loan?
Yeah, so an SBA loan is a loan that is partially guaranteed by the Small Business Administration. So essentially, it's a government guaranteed loan. There's two primary programs that are very prevalent. There's the SBA 7A program, which is the SBA's flagship program that can be used for just about anything. If you want to start a business, if you want to buy a business, if you want to buy owner-occupied real estate for your business, even special purpose properties like hotels, car washes, gas stations, things of that nature, all of that can fit within a 7A. And basically what the SBA is doing for the customer is they are acting as an additional guarantor on the loan.
Good morning, everyone. I am Micah Smith, and I am back with another episode of Rebuild and Rise. And as promised, I told you I had some amazing guests lined up, and one of them being Sterling, and he is going to tell us what he does. But we help people with rebuilding their credit and their finances, and it is so important that you have an understanding if you are trying to grow or build a business, what options you have. And the world of business, it really is an entirely different world. And so I did bring a pro, an expert here to talk to you a little bit about the business world. And if you are a business owner, how you can win. And so without belaboring it, I am going to introduce Sterling to the podcast. Sterling, thank you so much for being here in sunny Florida. I'm kind of jealous. I'm not going to lie.
Yes, it's lovely this year at this time of year in Tampa.
Absolutely. So Sterling, if you could tell us about your journey and how you started Lendstra. Is that how you say it correctly?
Yeah, it's Lendstra. And so we were founded actually this year on Martin Luther King Day is when we launched. And what we are is we are a nationwide SBA advisory service. And so my background is in SBA. That's what I've done really my entire career. When I graduated from school, I went directly into banking. I worked as an underwriter for several years before I became an SBA lender. And I did 10 years inside of the bank as an SBA lender across a couple of different institutions. And I decided to leave banking in December and go out on my own and start Lendstra because I wanted to help more people. The thing with working inside of a bank is that every single bank has their own credit appetite, right? And it's worthless arguing with your bank and trying to change their credit appetite. It's their money. They get to lend it however they want. And so what we were able to do here at Lendstra is we're able to work with an individual and take them to multiple banks so that we're able to give them more options and make sure that they're able to get their deal funded, number one, and then number two, make sure that we get them the best possible pricing. So that's really what we are. We are an advisory service. Some people may call that a broker, but we work directly with a client, and we are actually the people who represent them when we are doing these introductions to all of our lending partners, and we have about 40 of them now.
That's amazing. So SBA, I mean, that's quite the niche. What got you into SBA specifically?
Yeah, so I got really lucky. I never dreamed of being an SBA loan officer. I don't think anybody does, but it was one of those things where I kind of fell into banking by chance. So I'll just go all the way back to how I got into banking in the first place. So my mother actually worked at a funeral home of all places here in South Tampa. And she was the one who would actually put your funeral service together. And a gentleman came in, his name is Jim Furman. He's very famous here in Tampa because he owns about 15 car dealerships. So he's got Furman Mazda, Furman Nissan, Furman Chevrolet, all the different dealerships. And my mom did the funeral service for his mother who had recently passed. And at the time I was a senior in college at St. Leo University, and I was looking for an internship credit. It was the last credit I needed to be able to graduate. And my mom, being the savvy businesswoman that she is, she was able to build a rapport with him and then asked, hey, do you know anybody who could help my son get an internship? Thinking that he might send me to be at a car dealership, but turns out he's one of the biggest shareholders of the Bank of Tampa. And so he said, hey, go ahead and call the Bank of Tampa and let them know that Jim Furman sent you. And so you know how it works in these small community banks when a shareholder says, give a kid a chance, you give a kid a chance. I don't even know if they wanted to hire me. I don't think they had a choice, but it worked out. And I went in there and I just worked extremely hard. You know, it was one of those things where I realized that I was lucky to be in the room because everybody else that was an intern there, either their parents were very high up at the bank, like a senior lending officer, or their parent was a very large customer of the bank. And so, then it was me. And so I realized, hey, I'm lucky to be in the room, and I just worked extremely hard. And luckily my boss took a liking to me because he saw the work ethic that was there. And he's the one who actually helped me get my first big boy job in banking. And that's how I actually ended up at what was then US Ameribank as an underwriter, because he picked my resume out of the stack and told the guy who hired me that, I'm a hard worker and that he should give me a chance, basically, is kind of how it all came together. Fast forward a couple of years, and I was actually getting ready to potentially leave banking. I was fed up with it. I was tired of being an underwriter. Being an underwriter for me is the worst job in the world. You basically sit down and you write a term paper every single day. And I was getting really tired with that. And so I actually went and got my licenses basically to be a financial planner. And so I was getting ready to leave. I got my Series 7, my 66, and all those types of things. And then they called me in and they said, hey, do you want to be an SBA loan officer by chance? I had no idea what SBA stood for. I never had really worked on an SBA transaction, but I realized really quickly from going on a couple of calls as a financial planner that it's a lot easier when people are asking me for money than when I'm asking them for their money.
Yeah.
And so I decided, you know what, maybe I'll try this SBA loan officer thing out. And that was over 10 years ago now. And it's one of the best things that happened to me. It's absolutely changed my life.
That's amazing. One of my favorite sayings I always say, I'm like, life happens for you, not to you. And clearly that's what happened here. That's amazing. So for those people listening, because you said something that actually piqued my interest. So most people, and tell me if I'm wrong, but I feel like you didn't know what SBA was. I feel like most people don't know what SBA is either. So to our audience, can you tell everyone in layman's terms what is SBA? What is an SBA loan?
Yeah, so an SBA loan is a loan that is partially guaranteed by the Small Business Administration. So essentially, it's a government guaranteed loan. There's two primary programs that are very prevalent. There's the SBA 7A program, which is the SBA's flagship program that can be used for just about anything. If you want to start a business, if you want to buy a business, if you want to buy owner-occupied real estate for your business, even special purpose properties like hotels, car washes, gas stations, things of that nature, all of that can fit within a 7A. And basically what the SBA is doing for the customer is they are acting as an additional guarantor on the loan. So in the same way you'd have a co-signer, for example, on maybe a mortgage, the SBA is effectively acting as your co-signer on the loan for up to 75% of the portion of the balance. Okay, and so the reason that's attractive to banks is for a couple of reasons. Number one, it makes it safer for them because they only have 25% of the total balance at risk at any given time. And number two, it makes it more profitable for the bank because they take that guaranteed portion and they sell it on the secondary market to investors. And that creates a huge income opportunity for the bank. So that's essentially what an SBA loan is. There's also the 504 program that's popular as well. That's one is strictly for real estate or heavy machinery. So with that one, the SBA actually does hold a note, but basically it's actually a two-note structure where 50% is held by the senior bank and then 40% is held by the SBA, and they come and acquire that from the senior bank after your loan actually closes. And that one's a very popular program as well, particularly because it can go a little bit larger because the 7A program is capped at 5 million and some banks will do 504 up to even 20 million. So, when you see people doing larger hotel construction or when you see people doing those larger car wash type deals, typically those are going to be done with the 504 program.
That's really great information. So I would love to know, because obviously it takes certain qualifications. There's got to be all these different things in place, right? You come from an underwriting background. So, right, there's an underwriter that has to look at everything. So let's start with this first. Statistically, how many people, let's say out of 10, do you think will come to you and have everything lined up in place and be able to get approved for an SBA loan?
So now that I've moved into my role as an advisor, that percentage has certainly gone down because one of the benefits of working inside of the bank is that, I worked with a lot of people who are in the role that I'm in now.
Sure.
Right. So there's a filtering process before it got to me when I'm the SBA lender inside of the bank. And so I was seeing probably at least out of 10, probably 8 of the people who came to me had a really good package put together. Doesn't mean that they're going to get approved, but it means that they at least had the correct information and it was put together in a manner that makes it palatable for a bank to at least do an underwriting analysis on it. Whereas now that I'm in a position of being a broker, I do deal more with the raw public, right? So
Yeah.
people come in all shapes, sizes, all different levels of sophistication. And I would say it's about 50-50 right now. If I have 10 discovery calls, I would say 5 of them are really well put together and know exactly what they're looking for. And 5 of them have bad credit. So that's how it goes.
Well, since you went there, let's go there.
Yeah.
So let's talk about the credit component, because this is something that people don't realize. And so my firm, we help people become bankable. And so when people ask us about business credit, we say we have to start with the personal first. And so you obviously being in this world, right? Tell everyone listening and watching, what credit score should everyone be aiming for at a bare minimum to try to get an SBA loan?
So the bare minimum is a 650. That's where most banks draw the line. And notice I said that's where most banks draw the line, because the SBA program doesn't actually have a set credit score component. So the SOP that governs the program doesn't say anything about you having to have a certain credit score. However, they put the onus on each individual bank who's actually making the loan to make what they call prudent credit decisions. And so basically every bank kind of has their line in the sand that they're going to draw in terms of where they will stop with personal credit. For most banks, that's around 650. There are some lenders that will go lower, but those are pretty few and far between. I would say a 650 is pretty much your bare minimum. Really, you should be aiming for a 680 or higher. Absolutely. I tell people, as long as you've got a 7, your score starts with a 7 or better, you're usually good to go. Okay. Yeah. That's usually like a ticked box, and credit usually is not a real discussion point as long as your score is in the 700s or better. Only exception to that being is if you have like outstanding revolving debt that may give a bank some pause or some worry. But the score itself, I would say always shoot for at least a 680 or better.
Absolutely. I think that's great advice. Does it change? So let's just say you happen to get somebody approved at a 640 versus a 700. Does that change the rate that someone will have to pay? Like the interest rate?
It could. So the thing about pricing is that it is typically based on risk. And so if a bank feels like you are a riskier profile, then they may price your loan higher. Now, there's not just your credit score that comes into risk. A lot of times there's other things, right? What type of transaction are you doing? Is this a startup? What is the industry that you're in? Is this a restaurant? How much money are you putting down? Is there collateral that's in the deal as well? So there's many different components that make up risk profile in a transaction, but certainly your history as a guarantor, the number one determining factor for how you're going to handle your future obligations is how you've handled your past obligations. That's why credit scores are still so important to banks. And if you have a poor credit score, it could definitely increase your rate.
Absolutely. Absolutely. If you could define maybe this is too general of a question, but if you could define the perfect customer for an SBA loan, what does that look like from a financial standpoint, from how long they've been in business to credit profile? Ideally, who's a good fit for an SBA loan and why?
Yeah, sure. So this is something that does differ depending on what you're looking to do with the SBA loan, obviously. So I would say like an A-tier customer for us would be somebody who's owned their business for over 3 years. And during that time, they've been successful and they filed tax returns that actually show profit. Okay, that's a big thing, is that a lot of people file tax returns, but they show that they make no money. Then they also want a bank loan. You can't have your cake and eat it too, right? You got to pay Uncle Sam if you want Uncle Sam to support you in your ventures moving forward. So somebody who's been around for at least several years and is maybe looking to go out and buy real estate for their business. You want to do some owner-occupied real estate purchase, and that can actually be done at 100% financing. So they may not even need to put a down payment if we can show that they've been historically able to support the debt payment that they're going to be taking on once we add back their rent. So that's an A-tier SBA deal. Any type of real estate acquisition is going to be A-tier, but let's talk about maybe a rung down from that. Let's talk about like a business acquisition, because a lot of people who come into SBA are first-time business owners. And there's really two ways to become a first-time business owner. Either you can start one from scratch or you can acquire one that's already existing. We much prefer acquisitions as opposed to startups. Startups are extremely difficult to get financing for because the truth is that most startups just fail. I mean, especially if it's a mom and pop startup, which means that there's no franchise support. Those are very difficult to get financing for right now. And typically banks are going to want well beyond the 10% requirement per SOP. They usually want 15 or even 20%. I know some banks now that are at 30% down with 20% in cash reserves after you put the 30% down. So you basically have to have 50% of the project amount to even get approved there. But the person who's doing a business acquisition, what that customer profile would look like that's ideal for us is going to be somebody who has experience in the industry. That is number one. The SBA is big on, do you know what you're doing? If you do not know what you're doing, then we need to find out a better way to structure this deal. Maybe you bring in a partner, maybe somebody who's in the business now becomes a partner, or they stick around, they sign an employment agreement, something like that, so that we know that somebody who knows what they're doing is at least tied into this situation. And then number two, it's going to be, can you afford it, right? Because again, you have to make at least a 10% down payment. Typically, sometimes you can get it down to 5%, but we won't even go into that for the situation. We'll just talk about a 10% down payment. And we want to make sure that when you put the 10% down, you're not broke. We want you to still have additional, what we call post-close liquidity, right? So we want to make sure that if you're putting down 10%, do you have another 5 to 10% in reserve, right? You got to be able to afford what you're actually looking to do. And then, yeah, you have to have good credit, what we already touched on as well. Those are really the three things that I immediately speak to a client about when we get on the phone. So again, it's, do you know what you're doing? Can you afford this? And is your personal credit in a good place? If all of those things are a yes, then it's worth proceeding. It's worth digging deeper. It's worth getting a full financial package at that point. And then making sure, the last piece of that is cash flow and making sure that the deal is actually going to be able to support itself.
Absolutely. And this actually makes me think because, SBA in the business world, would you kind of consider that the creme de la creme as far as accessing funding? Would you say that's one of the best things that you can get if you need funding?
For a certain dollar amount, I would say it is.
Okay. What dollar amount?
So if you're 5 million or less, if you're in that 7A range, then I would say that typically an SBA loan is going to give you the best terms that are available on the market, especially if you're comparing it to like alternative financing sources like non-bank.
Yes.
People who are looking at, MCAs, for example.
Let's talk about those. Let's talk about those.
Let's talk about MCAs. But comparison to like an MCA, this is night and day.
Yeah.
It is literally like a 9 to 10% interest versus like a 60 to 90% interest product. And so it's not even comparable, honestly, to an MCA product. So it is the gold standard when you're comparing it to those types of products. The only thing I will say is if you're talking about a conventional bank loan, the pricing on a conventional bank loan is typically going to be at a lower rate than an SBA deal. The trade-off there is that the term is going to usually be shorter and you're going to have to put a lot more money down. So not everybody can afford to go get a conventional loan from a bank. And that's where SBA is a great bridge for that gap.
That's great. You really shed a lot of light, especially on interest rate comparison. And we'll definitely dive more into that because I have so many questions. I saw some really good posts that you did on Instagram, and I want to dive into that. So do you look at business credit at all, or is this solely determined based off of the individual's personal credit?
You know what's funny? In my 10 years of being an SBA loan officer, I've never declined anyone for business credit.
Okay.
It's never even a discussion that comes up as part of the underwriting. I know business credit it's a thing, obviously. It
Sure.
is, I'm not saying it's not important, but
Sure.
In terms of getting an SBA loan, never a discussion.
Amazing. I love it. So let's jump into the comparison between the SBA and the MCA. And I saw a post of yours that you had done, and you were like, yes, I could write MCAs all day and make a much bigger commission, but I don't do that. And here's why. Can you elaborate on that?
Yeah, absolutely. So for those who don't know what an MCA is, an MCA
Absolutely.
is what they call a merchant cash advance. And so basically it's not technically a loan. And that's how they get around some of the rules, like the usury law. So for those who don't know what a usury law is, basically usury laws came about because of loan sharking. So back in the day, the mob used to loan you money and then put in a ridiculous interest rate on it. So basically they created laws that said that you can only charge so much interest on a loan, otherwise it's illegal. And so the way that they're able to get around that with MCAs is they basically have a factor rate, not an interest rate, which means that we're basically taking a portion of your future earnings. Okay, so usually the way an MCA works is they will hook into your actual your operating system of your business, and basically as you have money coming into your business, they are withdrawing from your account every single day. Okay, so when you have a big sale and you make $1,000, boom, the MCA lender comes in, they take $300 and they're gone, right? So every single day they're doing this, and when you actually add up the fees and the factor rate and everything that you're paying, oftentimes those rates can be anywhere from 60 to, I've even seen 100%. Okay, so it can be absolutely ridiculous. It can be absolutely predatory. And listen, there are use cases for an MCA. When you need to get an MCA maybe is when you need the money tomorrow, and that if you get the money tomorrow, you can make X amount and then you can be out of it in 6 weeks. Right? There's times where maybe it's appropriate, but those times are so few and far between in comparison to how many people are being sold them. Because the problem is that there's so many, these young, hungry guys that they attract to go out and sell MCAs to mom and pop businesses just because they want to get that big commission that's tied to it, when really they're not doing what's right for the customer ultimately. They're just doing what's right for their pocket. And that's why we don't offer MCAs here at Lendstra. We certainly could. Trust me, I'm not going to lie. I've been tempted to because the money is amazing, right? I mean, the interest or the commission that they're earning are sometimes 10x what I can earn on doing it as an SBA loan. But again, we'd rather specialize in the premier product that gives you the best term, the best rates, and the most protection for your business overall. Because listen, if we're all giving out MCA loans to these businesses, there's not going to be a lot of businesses left in 5 years that can actually survive getting that many MCA loans and still be around to even become repeat customers down the road. So, we play the long game and try and do things the right way.
I love that so much. And that's really one of the biggest reasons I wanted to have you on here because, right, number one, it's about values. You said so many things that stick out to me in regards to my values and the core values of my organization. And, right, our industries, right, anything financial, there's so many people I feel like that jump into the game just to make a quick paycheck. And I love the fact that you are genuinely interested in helping someone win long term. And to me, that's what it's all about. You sleep really well at night. So you can't put a price tag on that. So thank you for doing what you do. I think that's invaluable because I really do get very discouraged when I see just the amount of MCA commercials out there and the amount of people struggling with money in their businesses and thinking that this is the way, this is the answer, and this is going to help. And what it actually does is it does the exact opposite, and the business collapses. And it's very sad to watch, right? That's why so few businesses make it within the first 3 years. And so I love that you do this and that you help people through this. So let me ask you a question. So equipment loans, bank statement loans, if anybody's listening, if they maybe know what these are, is that comparable to SBA, or is that something completely different?
It's something completely different. We do see them oftentimes on your balance sheet or your business debt schedule, and oftentimes we'll take them out with the SBA loan, especially if they're in the way of what we call our collateral. Mm-hmm. If they have any type of a UCC filing and they're taking a blanket lien on all business assets, we're typically going to want to get them out of the way so that SBA can be in first position on the loan. There are some instances where I've had somebody go out and get a separate equipment loan outside of the SBA loan, and that can be allowed for as well. It's on a case-by-case basis. That was a restaurant startup deal, and quite frankly, the bank was only comfortable going so far with their debt. and they said, hey, you can go get the equipment financing elsewhere because we're going to be in first position and we want to be at, let's just say, $1 million, and we don't want to go a dollar beyond that because that's just where we're comfortable on this project. So there are times where, those types of loans can be used in conjunction with an SBA loan, but typically the beauty of an SBA loan is that it can do all of those things and do it all in one place. So you don't have to go out and, get loans from here and here and here and kind of piece your project together. SBA is really built as a one-stop shop that should really service all of your needs as an entrepreneur.
I love that. So if you can walk us through, because I would love to know this, what does it look like when somebody reaches out to you and they say, hey, listen, I'm really thinking this is the right next step for me. I want to apply for an SBA loan. What does it look like once they enter your organization? Once they get in contact with you, what does it look like? Sure. Or your team?
Yeah, absolutely. So the way that works is that you can go to Lendstra.com. And when you're at Lendstra.com, currently there's two different options there. There's a book a call option where you can book a call with me directly, or you can actually go directly into our application portal. And basically the application portal will not just give you SBA options, it can actually give you some other options as well, depending on what your answers are as you go through our decision tree, essentially. So that's certainly one way to work with us. But let's say that you go through the decision tree or you book a call with me, both will eventually lead to the same place, essentially, depending on the answers that you give. And then once we have that initial discovery call, I'm going to learn more about what it is that you're looking to accomplish. You're looking to buy a business, or you're looking to buy a hotel, whatever it is, we're going to have that initial discussion. And then after that, I'm going to put together a personalized checklist of the items that we need to actually get the process started. Okay, so I will email that to you along with an upload link where you can put the information. And then once we have that information, we use that to put together an executive summary. Okay, and then that executive summary is what's putting you in the best light so that I can present you to my different lending partners and then try and get you different term sheets. Okay, so we typically shoot it to 5 to 7 lending partners that we know like your specific deal type, because we've already had discussions with all 40 of these banks that we currently have onboarded, and they actually complete their own questionnaire that tells me exactly what their credit appetite is. So now we know, okay, these are the banks that we need to send your particular deal to that'll give us the highest chances of getting you an approval. Okay, and so once we get those term sheets back, then I can review them with the client. We'll walk through them and say, hey, here are your options. And then usually there's one that we can recommend, say, hey, this bank's really good. I've known this loan officer here for a very long time. That's the beauty of working with me, because I was in the industry for 10 years. I was on the road with all of these guys at all the different conferences. So many of these people that I'm referring to now, I've had relationships with for, on 5 or more years. So I know who the best banks and who the best lenders are inside of each bank. And so we'll say, okay, this is the term sheet that we think would be the best option for you. But ultimately, it's the customer's decision. And then once they make that decision, then we make that connection to the bank. And then really the bank is the main driver from there moving forward. We stay involved. We make sure that you get to the closing table. We make sure that we understand what's going on during underwriting. We may even help you answer some underwriting questions, but really that's the primary service that we provide, is making sure that we get you to the right lender. And then once you get to the right lender, that we get you to the finish line.
Generally speaking, because I would assume a lot of people probably have this question, how long does it take to get funded?
It's about 60 to 90 days on average for an SBA deal. Okay. And what determines that is how good you are at paperwork, to be honest. If you're somebody who turns around paperwork very quickly, then this could be a 60-day process. It can even be less than a 60-day process. I mean, the fastest I closed a deal was like 34 days. That was for a client, and I closed my own personal SBA loan in like 20 something days. So
nice.
Yeah. So I mean, I know what I'm doing, right? So if anyone should close a deal quickly, hopefully it's the guy who's been doing it for 10 years.
Amazing.
So yeah, it can be done faster, but in reality, I tell most people 60 to 90 days just to set the proper expectation, because the truth is it can go beyond 90 as well. There's people who it can go to 120. It can go as long as you want it to go, really, as the client, right? If you're really dragging your feet and not getting stuff back to the bank, then this can be a very long process that just drags on and on. And also sometimes there's things outside of a customer's control, permitting being the biggest one. If you're doing a construction project and the permitting in a town is just really slow, I've had permitting issues that have gone on for almost a year with
Wow.
different projects. So, those are things that it's outside of our control, right? But on average, 60 to 90 days is a good estimate for how long it should take to get a transaction done.
Amazing. Okay. So, another question I have for you, what would you say is something that you see business owners doing every single day and that would guarantee them a denial and they don't even know that they're doing it?
Just not keeping good financials. People, there's mud in the water.
Yeah.
You don't really have good financial controls in place. Your P&L is a mess. Your balance sheet is a mess. You don't have a bookkeeper. You don't have an accountant. You're filing everything yourself on TurboTax. You're doing it wrong. You're showing that you're losing money when you're making money. You're doing all different types of things like that. That makes it so difficult to get you financing. And oftentimes what we have to do before we can even get you financing is go get you a new bookkeeper or go get you an actual CPA that can get your house in order so that then you can apply. And oftentimes they have to do, refiling of tax returns going back multiple years, and it can be costly, not just for the CPA's time, but also if you owe taxes, that can be a big deal as well. So that's the main thing, is that, keeping good financial controls in place, keeping a good team that will help you, do the bookkeeping, and just knowing your strength as an entrepreneur. If you're not a numbers guy or gal, that's fine. I've met many great entrepreneurs that are not great at numbers. It's not a prerequisite, but you need to hire for your weakness. And
Absolutely.
so making sure that you do that is going to save you a lot of time and heartache.
I love that. So many words of wisdom here. I think it really just comes down to, right, if the foundation isn't set up properly, you can't continue to build the house. And I love that you're reaffirming new things, old things. This is so important for all business owners. And we would love to see more successful businesses out there because there's some amazing entrepreneurs out there. And I always say, just because you're really good at something doesn't mean you're a good business owner. So I love the fact that you're like, delegate. If you know you're not good at something, delegate. Hire the professional. It's worth its weight in gold.
100%. 100%.
I love that. So, words of wisdom. So, I want you to choose anything. So, if you could leave us with one lasting piece of advice, and I want you to pull deep here, like personal, business, I don't care where you go with it. But if you can give us one piece of advice from your just amazing adventures, what would it be?
I mean, it really just comes down, a lot of being an entrepreneur honestly comes down to just your self-belief. One thing I learned from my father, just watching him, was he made it as a musician, which is like one of the toughest fields to
Wow.
make it. Yeah, he was a Juilliard graduate, professional musician.
Wow.
Used to be an opening act for Stevie Wonder. I mean, he did really make it as a musician, and the reason that I think he was able to make it was that he had an unnatural self-confidence. Like
Yeah.
some people would say, almost like an ego or a bravado or whatever it was, but he believed in himself so much that he made other people around them believe. And I think that that's what it takes as an entrepreneur. You have to have that type of self-belief in yourself. When other people don't see it, you need to see it. And if you see it for long enough and you're convicted enough, eventually other people will start to see it as well. And so, that's something that you can take with you, and just make sure that, when you look in the mirror, you like who's looking back at you, and that person that's looking back at you believes in you. If that person believes in you, you can go a long way.
I love that. Okay, I was gonna end that on. I was gonna end with that question, but I have one more question for you now. Did Dad rub off on you?
No, so I made a little bit of music when I was young, but to be honest with you, I was more interested in soccer. That was my
Okay.
passion.
Okay.
And I played soccer in college for a couple of years, so that was my thing. But no, music is not. You're not going to find any Sterling music running around out there.
That's amazing, though. That's a really cool story.
Yeah.
Awesome. So, last piece, where can everybody find you? How can they contact you?
Yeah, so you can find me. I'm on all the social media platforms at sterling.sba. And again, you can just visit lendstra.com. That's Lendstra lendstra.com, and you can directly book on my calendar, or you can directly apply through the website. So many different options, but the best way to get me is definitely on the website, lendstra.com.
Amazing. And I'm so glad. I mean, we connected on Instagram and instantly I just did this complete deep dive on who you were. So guys, if you're not following him, all of his links will be in the show notes. So that is a wrap. Guys, we're so excited. Thank you so much for joining us today for another episode of Rebuild and Rise. I am your host, Micah Smith. And of course, if you liked this show, please do like it and subscribe. And if you know someone that needs to hear this, please share it with them. Thanks so much for joining us. God bless. Thank you so much for listening to this podcast. If you enjoyed this episode, please hit like and subscribe. And if there's someone you know that this would help, please share this with them. If you are looking to fix and repair your credit, you can find us at www.micaabigail.com. And if you're looking for more personal stories on myself, you can find me at Fit Credit Doctor. Thanks again for joining, and God bless.